Well, folks, I wasn't planning on doing another video, but this is absolutely breaking news, emergency type news. Netflix stock, the first big tech stock of the earnings season, just reported earnings, and it's a disaster. And I mean an absolute disaster. And we'll get into the earnings here. And what I want to talk about is I want to talk about Netflix stock. And is this stock a buy? It's basically going to be trading at multi-year lows tomorrow. And I want to talk about, is this stock a great opportunity now? Is it not? Stay away, those sorts of things from my perspective, somebody that's watched a stock. I've never personally ever owned Netflix stock, but I've always watched a stock. And it usually is always traded at insanely rich valuations, and that I just couldn't wrap my head around. So that's why I've never been personally able to own the stock. And we need to talk about, at the end of this video, I really want to address what this means for earnings season. The fact that this is the first big tech to report earnings and it's a complete disaster and the stock's collapsing right beneath us as we watched it. It was already at pretty much a 52-week low today. And then for it to collapse the way it is after hours right now, we got to talk about what all that means in this video as well. Okay, by the way, check out FTX US, the first link in the description down there. Get up to $100 in free crypto. It's an official crypto partner of Jeremy Lefebvre in financial education. Check that out down there. It's pretty darn awesome. And make sure you use the code Holy Smokas for your referral code to get that crypto. Okay, so Netflix shares cratered 20% after company reports it lost subscribers for the first time in more than 10 years. Okay. This is, this is a problem. Here's the deal. Okay. Netflix stock has always traded at insanely rich valuation metrics. I don't care if you're looking at trailing 12-month PE, forward PE, price to sales ratios, price to book ratios, any metric you want to possibly look at, Netflix has always traded insanely rich. Now, why did they always command this insane valuation? Okay. It's a fair question. Why is this? Well, it's because they always had insane growth. They were always growing subscribers in a massive way. People looked at this company as a recurring revenue stream. So it's like, yeah, they just keep adding more and more customers. Those customers just keep paying more over time. They can go from $8 to $10, $10 to $12, $12 to $15, right? And they just keep building the pie bigger and bigger and adding more and more people, more and more numbers. And so that's why this stock always traded at very rich trailing 12-month PEs and forward PEs and price to sales and price to books and all those sorts of things, because it was kind of seen as one of the holy grail business models of the stock market. And that's how this company grew to be at one point a multi-$100 billion market cap. And now this is a company that could be trading under $100 billion. Within this week, it was a possibility, right? And so this is a very, very different shift for the stock, right? So shares of Netflix cratered more than 20% Tuesday after the company reported a loss of 200,000 subscribers during the first quarter. This is the first time the streamer has reported a subscriber loss in more than a decade. Very important. Now, EPS numbers look tremendous. That doesn't matter. EPS came in at 353 versus 289 expected. That's great. But for Netflix investor base, they don't care about that. I mean, don't get me wrong. Everybody likes to see growing EPS and you to come in and beat numbers, but it doesn't matter when when you lose subscribers. Just bottom line. And people look at that loss of subscribers and potentially a way bigger loss next quarter, and they're like, this EPS, it's growing now, but it could start shrinking, right? Revenue did come in and miss. Revenue to Netflix's shareholder base is more important than EPS. In terms of Netflix's shareholder base, what do they value the most? Subscriber numbers, right? Subscriber growth is number one over everything in terms of how Netflix's investor base values that stock and judges that stock. The number two most important thing is revenue. The number three most important thing is EPS, okay? Now, if you're looking at a traditional value stock, this is usually number one. EPS is usually number one, and everything else is after that, right? But not for Netflix. So the one thing that matters the least for them, they had a huge beat on. Everybody's looking at revenue and mainly that subscriber loss. I'm like, Global paid net subscriber additions, 2.73 million was expected. Netflix previously told shareholders expected to add 2.5 million net subscribers during the first quarter. Analysts predict that number would be closer to 2.7 million. Either figure would mark a significant downturn from the 3.98 million added during the same period in 2021. So, I mean, I don't even know where to start. Like, this number is so insanely bad. And obviously, when it comes to Netflix, this was seen as a great pandemic play, right? The ultimate one. I mean, other than Peloton, this was the ultimate pandemic play. Think about it. Everybody was forced to be home, right? You couldn't go to concerts. You couldn't go to sporting events. You couldn't do like so much stuff, right? Even like a lot of restaurants were closed. Cities were closed. Like, what are you going to do? Well, you're going to sit inside. You're going to probably watch things like YouTube, right? And you're going to watch Netflix. And so Netflix got this massive super cycle boom of people that some people never even considered signing up for Netflix. They went ahead and did it because they're like, shoot, man, I'm spending all this time at home. Why not? I'll go ahead and I'll order Netflix because what else is there to do, right? I don't care. It's $10, $12, $15 a month, whatever. Okay, I'll pay it. And so that was a great boom. But the problem is the world is obviously opening back up and has been opening back up. And now people, some of those folks that didn't really care about Netflix aren't really caring. Simultaneously, you have a Netflix problem, which is they don't have a big, massive, game-changing hit show right now, which Netflix thrives on these kind of game-changing hype shows that gets everybody excited, that says, oh, you got to get Netflix because, they got this show out. Did you see the new show? And right now, they don't have one of those shows out there that's like, oh, you got to see the new Netflix series. This one's crazy. They don't have one of those right now. I always know when Netflix has one of those because I hear about it. I care very little about Netflix and TV and all that stuff. I spend a very minimal amount of time in a given month on those sorts of things, right? But when I hear it, I know it's like, this is a big show. And so I always hear about the biggest of the biggest Netflix shows or HBO or whatever because it makes its way to me. There's nothing going on right now for some game-changing show for Netflix in the short term. And so this is obviously a massive, massive negative. Now, in terms of Netflix stock, and then we'll talk about if this means something more to the market, right? In terms of Netflix stock, valuation-wise, the stock has actually finally started to get compelling very recently, okay? And I don't even want to talk about the after hours quite yet, but this stock was trading, going into today, 348 or so. Market cap's obviously come down significantly. Price to sales ratios among the cheapest it's been in a decade or so. PE ratios finally realistic. Forward P's finally realistic. Price to book under 10 now. And so going into these earnings, essentially, Netflix has finally looked like it's actually getting attractive, right? Now, after hours, the stock is falling a ton more, and it's at 270. Who knows where it shakes out at, right? And so this stock was back in this price in 2018, 2019, and for just a bit here, that was either Rona lows or that was at end of 19, somewhere around there, right? And so this is a moment in time that the stock is at multi-year lows after hours, right? Now, the issue with Netflix, and the reason why I can't go buy this stock, well, one is there's a lot of other stocks that are deals out there that I think have more upside long-term than Netflix, right? But the main reason why I can't go out there and buy Netflix tomorrow is, man, I don't know when that stock might stop falling, to be honest. Remember, this is a shareholder base. The people that hold Netflix stock hold that stock because it's a growth company, okay? Now, if all of a sudden you talk about you're losing subscribers, you are no longer a growth company. But the other issue is it's not like Netflix necessarily trades at the cheapest value if you're trying to value it as a value stock, right? Because people that buy value stocks usually like forward P's under 20. Netflix doesn't have that right now. And so value investors aren't going to necessarily come flooding into Netflix right now. And so it's going to be in an awkward stage right now where growth investors want out. Clearly, they're selling it massively after hours because they're like, we don't have growth. We're losing subscribers. We might lose a ton more subscribers next quarter. It might even be worse. We'll have to see. And so all of a sudden, Netflix shareholders start looking at this and like, I don't want this. And the value investors looking at it like, I don't really want it either because it hasn't dropped enough yet. Value investors, they probably want this stock with a 1 in front of it. And I know that's crazy to think about for a stock that was $700+ not that long ago, like a snap of fingers ago. And value investors, for those folks to really step in, I think they're going to want a 1 in front of it. $185, $175. I think the value crowd steps in and says, hey, you know what? At $175, at a market cap of the market cap at that price would be probably 70 billion or so. Forward P would look pretty darn attractive, right? Price to sales ratio at that moment would probably be a 3-ish. 4-ish, something in there. I think value investors will step in and say, you know what, this one's worth it. Growth investors, those folks look for growth. And if you don't have growth and you're not growing subscribers, they can't step back in until they see that growth again, in major growth. And so until Netflix starts adding new net hundreds of thousands of subscribers again, the growth investors are going to be like, I'm good, man. I don't want this right now. And so this leads to a very, very negative cycle for Netflix where the value is like, I don't want it, and growth is like, I don't want it. And so then you're really counting on traders to come in and try to swing the thing, right? And traders are going to look at this and like, with potentially a flood of growth investors out of this for potentially days or weeks to go into the future, or maybe even months, right? Because also keep this in mind, right? Netflix is falling massively. Now, let's say another big tech falls massively. Let's say Apple doesn't quite hit some numbers, right? And Apple held up well last earnings season, but let's say this one gets it for whatever reason, and they just don't quite hit those numbers that were expected. And let's say Apple pulls down 10%. That's going to pull the entire NASDAQ down. That would pull Netflix down more as well. Let's say Microsoft doesn't quite hit those numbers and the stock falls 5, 7, 10%. That would pull Netflix stock down more. Let's say Google doesn't quite hit it the way they're supposed to hit it. That's going to pull Netflix stock down. And so I think that from a trader perspective, if they're thinking about swinging it for a few weeks or a month or something like that and using it as kind of a swing trade and hoping it bounces back from, let's say, 270 or 250 or whatever it hits to 300, 350, I think a lot of folks are going to look at that from kind of a worried perspective. Now, in terms of Netflix, is this like a bad omen for the stock market, right? So this is the first big tech to report, and they reported disaster, right? Now, tomorrow we have Tesla. Now, Tesla, we know orders have been insanely strong for them, right? The only issue with Tesla potentially is what's going on in Shanghai, and obviously Shanghai shutdowns, and I've heard production's gotten back up and rolling there, but we don't know how much that's going to affect short-term numbers. So Tesla, we're going to have to see as far as that goes. Now, the following week is when you get massive big techs reporting, right? Microsoft reporting earnings on Tuesday, Alphabet reporting, Google, McDougal reporting on Tuesday as well. Then you get Facebook and PayPal reporting on the 27th, right? Which those stocks are already beaten down, so that's good news for them. But heck, Netflix was already beaten down, and look at how much that one's falling. It's down another 20+%, right? And then you get Apple, Amazon on the 28th. Phew, I mean, you just get big tech after big tech. Then you get the AMDs, NVIDIAs, Amazon, all those guys as well, Shopify, Square. So you're talking about a situation here with Netflix where I don't know if Netflix is necessarily a result in everybody's going to have bad tech earnings, essentially, right? If we think about the big tech, other big techs out there. For instance, everybody went out of their way to order Netflix during the pandemic. Everybody didn't go out of their way to order a Tesla during the pandemic, right? Apple obviously, I think, benefited from the pandemic in quite substantial ways. So they're one I worry about a little bit. However, every time I go by a dang Apple store, it is packed. So that's where I'm, it's a tough situation for me because I'm like, there's no doubt Apple benefited in a huge way, right? Everybody's at home. Everybody's going to be ordering MacBooks, Macs, iPads, all those sorts of things like crazy, right? Then you had stimulus, which definitely had a flood into AirPods and phones and things like that, right? There's just no way you can't say that didn't happen, at least to a certain extent. So I do worry about Apple a bit, but I'm like, dang, every time I go by their stores, they're so dang busy. So I'm like, that one I'm conflicted on. That one's a wild card for me. Microsoft, I think, is fairly safe from the perspective of, folks that use Microsoft just continue to use Microsoft in the suite of products that Microsoft kind of has benefit there. Google, I worry about a little bit in terms of obviously YouTube. Like, people just don't have as much time to watch YouTube as they might have when they were forced to be home. So I do worry about that a bit in terms of Google's earnings. However, from what I heard is Google search has been, advertisers have been paying through the roof for ad rates as far as that goes, but it could also be less people using it. So that's a confusing kind of dynamic. Meta's already been hurt in a substantial way, but like we talked about, just because you already been hurt doesn't mean you can't be hurt more. Look at Netflix, right? That kind of does worry me a little bit, but I don't think Netflix necessarily represents all of big tech. I think Netflix has some very, specific problems going around, specifically around they had this big influx of people just using it all of a sudden, and they don't have a massive show out right now. Now, Netflix, the great thing for them is if they come out with some big hit show, next thing you know, numbers will get much healthier for them, but that's a tough that's a tough thing for them, you know, to do that. So for me, when it comes to Netflix, this is not a stock I can go out there and buy tomorrow. There's too many other deals in the market that I feel like are in a better position than Netflix that will have better risk reward profiles over the coming years. So that's just not a stock I can go out there and buy. So hope you guys enjoyed this video. As always, kind of a little emergency breaking news type video. Make sure you sign up for FTX US using the first link in the description down there. Use Holy Smokers as a referral code. Much love as always, and have a great day.